Welcome to The Explainer. Today, we're diving into the brilliant Nobel Prize-winning ideas of James Meade, an economist who really got to the heart of one of the biggest dilemmas a country can face. It's this classic economic tightrope walk, right? It's a puzzle governments have been trying to solve for more than 100 years. How do you get jobs and prosperity going at home without completely messing up your financial relationship with the rest of the world? See, here's the problem. When you pump up the economy to create jobs, people naturally start spending more money. And a lot of that money goes towards buying stuff from other countries, imports. That can throw your international payments way out of whack. So let's get into the work of the guy who came up with an amazing framework to solve this very problem. Now, James Meade wasn't just some academic scribbling equations in an ivory tower. No. His work was really driven by this deep moral purpose, one that was shaped by one of the absolute worst economic times of the 20th century. And this quote, this tells you everything you need to know about his motivation. For Meade, seeing millions of people out of work wasn't just bad economics. He saw it as a moral failure. He was genuinely horrified by that waste of human potential and was dead set on finding a better way. And you can see his journey here. He went from being at the absolute center of the Keynesian revolution in Cambridge to putting economics into practice during World War II, which all led to his groundbreaking work and, eventually, the Nobel Prize. So, in his most famous book, The Balance of Payments, Meade lays out this really clear challenge for any government. He basically boils it all down to hitting two main targets. First up, you've got external balance. Think of this as just keeping your country's financial relationship with the rest of the world on an even keel. Not owing too much, not having everyone owe you too much, just stable. And the second target was internal balance. This was all about keeping the economy healthy at home. And back then, that pretty much meant one thing, making sure that anybody who wanted a job could get one. Now, here's the thing. In the 30s and 40s, the common wisdom was pretty simple. If you just get the economy humming along enough to create full employment, you didn't really have to worry about crises getting out of control. Inflation would sort of take care of itself. But as the world started to change after the war, Meade began to realize there was a big flaw in that thinking. And this insight, which he shared in his Nobel lecture, was a real game changer. He figured out that you could actually have full employment and still get slammed with rising prices. This was that nasty thing called stagflation, that awful mix of a stagnant economy and high inflation that really hit a lot of countries hard in the 1970s. And that was the breakthrough. It completely reframed the puzzle. Suddenly, policymakers weren't just chasing two targets anymore. No, they were juggling a much trickier set of three. You had to have a stable balance of payments. You needed full employment, and you had to keep prices stable. Okay, so if you've got three different targets, how in the world do you hit all of them at once? This is where Meade's framework gets really elegant and, frankly, super powerful. Meade's core idea was as simple as it was profound. You can't just use one tool for everything. It's like trying to build a house with only a hammer. Instead, you have to assign a specific policy weapon to each of your economic targets. And this sets up these really clear lines of responsibility. The people who control government spending and interest rates, the central bank and the Treasury, their job is to keep inflation in check. Then, wage negotiations become the main tool for making sure we have high employment. And finally, the exchange rate, what your currency is worth, becomes the dedicated lever you pull to keep your international payments in balance. Meade's framework isn't just some dusty old theory from the history books. It really shines a light on the exact same balancing act that finance ministers and central bankers are still trying to pull off, every single day, all around the world. I love this quote because it just perfectly captures the philosophy behind all of his work. It's this pragmatic approach that says, yeah, we want social justice, that's the warm heart, but we also need clear-headed analysis and realistic, practical action to get there. So at the end of the day, Meade's real legacy is this powerful idea. Managing a modern economy isn't about having to choose between jobs or stable prices or international balance. It's about having a sophisticated toolkit and knowing exactly which tool to use for which job. And that's really the question his work leaves us with, isn't it? In our crazy, interconnected global economy, is this delicate balancing act actually harder to pull off now than it ever was? It's a reminder that this search for economic harmony, well, it's a challenge that continues to define our world.